Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. Y'all know that drill. Smash that like button, subscribe if you haven't. And just a little disclaimer, nothing should be construed as financial investment advice. These are just my opinions, thoughts on the markets. You can read more about the disclaimers, more plural, so I have multiple, below. So, sorry, I haven't been able, this is what I said in my previous video. I'm not going to be able to a lot of different things going on in my life right now, so I'm not be able to do it every day. New job, new everything. Uh, new family. New family member, and among other things. So, big adjustment here. But yeah, I am committed to this, and I'll try to do this as much as I can. So we're going to briefly go over the economic data to start out. I'm going to try to do another video today. Leading index. Remember, I did say I was going to stop commenting on that. So Richmond Med Manufacturing, that was down 13. Really bad data and nothing else really of significance Tuesday. So that wasn't, and the services, that was down too. So services, not good. Mortgage applications, that was down. People aren't buying homes. Building permits, that was 1.467, consensus 1.48, way below consensus, but still up. Global PMI, that was 51.2, so that was actually good data. New home sales, 0.724, that's above expected. Now, I think the reason the new home sales is because all the builders are drastically cutting their prices. They're giving very favorable terms, and they're doing what they can to entice. I don't think it should be construed as positive, but the market probably will construe that. And then if you look at durable goods orders, that was up 9.2, very good. Chicago Fed national activity, that was negative. Jobless claims, nothing burger, continuing. Now, the existing home sales, that was poor. But the thing is, they'll say, oh, well, it's an example to another reason we need to lower interest rates. So, Fed composite, that was negative. And then Friday, consumer sentiment was better than expected. But inflation expectations, those were okay. But yeah, if you look at it, it's mixed to bad data. And so a lot of people might construe this as a cut, but that's the data. If you look at it, S&P 500, that rose for third consecutive weekly recap. That's right here. So NASDAQ saw second best week since November. And gold, look at that, finally experiencing a pullback. So we'll get back into gold and everything, but right now, this is the thing. Bear market, the stock market, that is, nothing goes straight down. It's doesn't things go up, they go down. They like the bull markets and bear markets. Bear markets like to sucker the bulls in every chance it gets, and if they'll go on extended rallies to do that, they're going to do that. And same with bull markets, they try to shake everyone out, and once everyone sort of comes in, that's when the rug's pulled. This is just my experience. So I think that's what this is. They're trying to get the last suckers into the stocks before. I don't expect a rollover yet, but this is what markets do. They try to get, and during bear markets, they try to get all the suckers in. They do it everything they can. If you don't believe me, look at gold. It topped in 2011, but 2012 was mainly in half of 2011, and even January, that was when, I was one of them, the suckers. They were getting every last sucker into that rally. So, and they did. And now people hate gold and never want to go into it. And they missed the 2000 to 3000, 32, 34, 500 run. So Here's another thing, and to show this, look at this. These things do not happen. This is 5 days ago, so U.S. leverage longs record 6.6 billion net inflows. Three-time leverage Nasdaq came from retail investors, so maybe roaring kitties in the stock market. I don't know. Oh yeah, roaring kitty's a real person. I meant like figuratively, like what he represented. So there you go. Generally, this is not good. Things generally don't happen when you have all these leverage longs. So in terms of the actual economy, and I think this is going to make its way. Everyone wants to blame it on tariffs, but you all know my position. They're just using it as an excuse so they can talk badly about the economy. Look at this iconic restaurant, IHOP, is in bankruptcy. So now it is Chapter 11. You have to remember. So you're not going to just go around and be like, hey, I thought Johnnie Market said they were bankrupt. It is a restructuring, but you have to remember on that, there are people getting burned, people who had assets in IHOP, where it's bank shareholders. Even if it's not public, there's people who own the company who had to declare bankrupt. So IHOP, which I mean, I don't know exactly because I liked IHOP traditionally. I hate how they do the chocolate chip pancakes. They should just put the chocolate chips in the batter and that's it. I hate how they do like they have this new batter type and they put this chocolate flavored. I don't want chocolate pancakes. I want chocolate chip. And I hope that's the reason they go bankrupt because they really need to learn their lesson. I do better chocolate chip pancakes than they do. But all right, enough about my rant about how much I don't like their chocolate chip. But I think it's because people can't afford to go out to eat anymore. They don't have it's by the margin. And look at this Burlington, New Jersey based debtor. Assets, liabilities, petition. So you look at it, there are people losing on the other end. So this is not good. Even though it's a restructuring, it's not good. And in New Jersey, there's several closed. So, but yeah, IHOP, I mean, I remember one time my friend went there and there was a bug underneath the syrup. They have like four syrups. Sorry, yeah, they have like four. There's like strawberry, pecan, old fashioned. I used to like them. I always tried them. I had one friend, he just tried old fashioned no matter what. I actually liked the pecan, but anyway, but it didn't seem like, I mean, last time I went there was a couple years ago. It seemed like the quality was down, but not to the point where it stopped buying. So I do think this is the economy, even though quality has gone down somewhat. I do think, I mean, 2000s and 1990s, I used to love IHOP. I went there all the time. I remember one time after exams, I would go to IHOP to celebrate. Here it is, another good indicator. U.S. executives have rarely been this pessimistic about the economy. Well, that's because they're looking at the books and seeing it. They're very pessimistic. Now they're not going to admit it. This probably is going to say, tariffs. He mentions better, stronger, worse. Look at that. That's where it is, quarter one. Look, that's just from. So you see that right there. Of course, tech. They're always. Look at this. This ratio is even lower than the 2020 crisis. And what I think it is they're looking at the books. And they're like, wow, are we really this bad? That's what I think it is. Remember, if you followed this channel, you saw all the ones resigning last year, and I was talking about it. Of course, you don't see that anywhere else. You don't see it on CNBC, at least. I don't even think you saw this story anywhere else. I think some, if they actually researched like me, they would actually have talked about it, but I mean, that's one thing I'm sort of like, gosh, these people that have, if I could do this full time, I could have a fantastic research story. But anyway, let's keep going. More news. businesses have never been this pessimistic. So it's not just executives. This one talks about look at this, current business conditions tumble 30%. New orders dropped 26 points. So not even 2020 lockdown saw this drop in expectations. So as you can see, look at U.S. layoffs surging at recessionary pace. So you can see just not bad news. This is what I think. And when you want more proof, this was on CNBC. More Americans are financing groceries with buy now, pay later loans, and more paying those bills late. So can't eat, can't afford to eat. And if they can't afford groceries, what else? I remember someone talked to me about a restaurant, which I think is great. It's called Maggiano's. It's an Italian restaurant. It's a regular chain. I'm assuming it's national. Maybe it's local where I live. But they were telling me, family of mine were like, yeah, we went there Saturday night. It was empty. And I was like, yeah, people can't afford to eat anymore. So if they can't, you can see from here, they can't afford to get groceries, they're not going out to eat either. So anyway, just if you look at this, let's go to gold. You can see the economy's horrible. It's going to go into the data, and you can see that they're trying to blame this on the tariffs, but this all was happening before the tariffs. So don't be fooled. Is this whatever? So anyway, I want to go back into this gold. This is why I was sort of, when it hit over the 3,000, I was sort of little, like you can notice, I was not all that bullish before. And you can say I was the only one when it was in the 2000s, like, hey, last year, 2024, it's going to 3,000. I showed the receipts, just go to all the past videos. I was the only one saying, don't worry, just turn on autopilot and it goes to 3,000. Of course, not giving advice. This is just my opinion. But I started to see a lot of gold articles. Yahoo Finance had them. Now Goldman Sachs now sees gold hitting 3,700 by the end of 2025. And the most extreme, he sees 4,500 by the end of the year. UBS raised its gold price to 3,500. So you see all these big banks talking about and raising gold. Let's just see this. And I'm starting to see, where is this? I was just hoping. Here it is, 19. Yahoo Finance. Gold is skyrocketing. It's the world's largest, still a buy. And of course, I'm sure they say it's a buy. Look, where to invest $1,000. Oh, that's 1,000. So yeah, they're talking about pumping Newmont gold. So they're talking. This gold long-term direction is upward. So this gold rush could be nearing its end. That's actually a bullish sign. So should you invest? Well, yeah, you're starting to see mainstream articles about gold, and that's what worries me. And look at this. Yahoo Finance, why gold could reach 5,000 in 2 to 3 years. So as you can see, like, this is what has me worried. You see people who are never bullish on gold becoming bullish. And that's why, if you look at it, I think, there's got to be some sort of pause or wipeout. But I've been consistent. I think silver, I was listening to a couple of things. I was listening to a couple of people I respect One of them is JP Perez, and he says silver has a long-term cup and handle, and that silver is going to go to 50, which I agree. I think silver will be going to 50 soon. Now, Avi Gilbert said he thinks that gold could possibly top, but he doesn't know. He said he has to consider the alternative, but then he said gold and silver could diverge and everything. I don't really have that much. Just this is, see, you look at the red, this is coming. So on a 5 year, this sort of went up, but it didn't go up completely straight. So there is like a little bit pullback here, pullback here. I think it will base. I just don't see the top because I remember everyone going into gold, everyone not wanting to buy stocks, going into gold. I don't see that type of euphoria yet. So I think it has one more upswing. I think silver gets to 50. Gold, I personally think will go to 400. But what I also want to see is, say it again, but I want to see the Huey around 500. That's what I think a lot of pulling. That's when I'll consider pulling a lot of chips off the table. Is let me do an all-time high. See, this is where the Huey is 550, 558. Right now it's at 389. So I would say the Huey around here, somewhere between 5 or 600. That's where I'm gonna. This is just my opinion, not investment advice. But Avi could be right, but he thinks gold stocks can move up more and diverge, and silver could diverge. It's a weird thing. JC Perez, Jordan thinks we're in an intermediate top is another one, but he thinks we're on a bull market, which he could be right. He's right a lot too. He just doesn't know how to brag about it. Jordan, he doesn't brag enough. That's his thing. He has a lot of good calls. I don't keep track of all of them. So it's good to be humble, but yeah, I can't see. Anyway, GDX 5560. I remember that from hard. So anyway, that's all. Just remember the disclaimer not to be construed as